ASML has reported Q1 2026 total net sales of €8.8 billion, gross margin of 53%, and net income of €2.8 billion. The company also lifted full-year 2026 guidance to €36 billion to €40 billion. This is the signal. The bottleneck is still alive. The capital flow stays focused. ASML said Q1 sales were within guidance, gross margin landed at the high end of guidance, and order intake continues to be very strong. Management also said customers are accelerating capacity expansion plans for 2026 and beyond. That means the demand side is not the problem. The bottleneck is still supply, execution, and lithography capacity. The most important change is the new full-year outlook. ASML moved 2026 revenue guidance from €34 billion to €39 billion up to €36 billion to €40 billion. Q2 guidance is also solid, €8.4 billion to €9.0 billion in sales, with gross margin of 51% to 52%. That is a clear message from management. The business is still expanding, and the machine is still running near the bottleneck. Reuters reported that ASML shares rose 1.2% after the announcement and briefly hit a record high above €1,300. Reuters also reported that ASML is the only maker of EUV lithography tools, which makes this company a direct control point in advanced chip production. In other words, when this company speaks, the bottleneck speaks. The main risk is not weak demand. The main risk is export controls, supply chain limits, and how much product can still move into China. Reuters reported that ASML still expects about 20% of 2026 sales to come from China, but that new restrictions could pull results toward the low end of guidance. This is the pressure point we watch. ASML said it plans to ship 60 low-NA EUV tools in 2026, about 25% more than 2025, and Reuters said the company expects capacity for 80 in 2027. That is the operating bottleneck in plain view. More tool output means more customer capacity, and more customer capacity means more revenue leverage for ASML. ASML also continued returning capital. In Q1, the company bought around €1.1 billion of shares under its 2026 to 2028 buyback program. It also intends to declare a total 2025 dividend of €7.50 per ordinary share, a 17% increase versus 2024. So the story is not only growth. It is growth plus shareholder return. Our action is simple. Keep capital directed toward the bottleneck. Track 4 things only: revenue guidance, gross margin, order strength, and export control risk. Do not dilute the mission with noise. ASML stays the first asset. Chainlink stays the second asset. The system stays concentrated, simple, and controlled.